According to Kevin O'Leary, avoiding to invest in the Chinese market is crazy and makes no sense whatsoever. O'Leary states, Chinese stocks are on sale right now. With the projected size of China's economic growth and the delisting issue with the United States diluted, China should grow faster than usual. O'Leary states, to put it frank, both economies need each other, so to have no investment in the Chinese market makes no sense whatsoever. O'Leary continues to say, there's no doubt that the Chinese economy will become the largest economy on earth in the next 20 to 25 years. There's no stopping that and no denying it. Everything that you are hearing about China right now is just noise. In the end, a good investment in any Chinese stock will reap many benefits in the future. Here is a short clip of that interview.
Service at the same time. I wanted to ask you about China stocks. Right now they're looking incredibly cheap. Can you invest right now with all of this regulatory overlay in China to take advantage of these depressed prices?
You know, it's such a great question you're raising here, because if you're looking for long-term secular growth, there's no question the Chinese economy over the next 20, 25 years is going to become the largest economy on earth. There's no stopping that and no denying it. And there's an economic war, a technology war, a regulation war going on with the United States. That too could be temporary. We've seen this happen in semiconductors, where they're no longer allowing certain chipsets to be shipped to China. But frankly, these economies need each other. So to have no allocation to Chinese market makes no sense whatsoever. Again, you've got to stomach volatility. The Chinese consumer is emerging. I own China stocks. I have an index of them, particularly global internet behemoths, large companies like Alibaba and many others that are the reflection of what the American economy's gone through. If you own Amazon, why don't you own Baba? The same idea. The Chinese are using online services the same way. Tencent, others, they're there because that consumer is demanding it. So there's a lot of political issues around owning Chinese stocks, the threat of delisting them, but all of that is noise. To have no allocation to the world's fastest growing economy, yes, I agree it's slowed, but you know long term it's going to be the biggest, is crazy. I mean, that to me makes no sense whatsoever in portfolio management.
That's what's been happening this week in the world of neo stock analysis and predictions. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Financial Health right now, so that next week you'll get the inside scoop on the latest developments to keep you and your business on the leading edge of neo stocks and predictions. If you enjoyed this edition of Neo Stock Analysis and Predictions, leave a comment and please hit the like or share button, we'd really appreciate it. Are you still watching and want more? Check out last week's Neo Stock Analysis and Predictions by checking out our Neo playlist.